The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 17th wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And, of course, the easiest way to do that, well, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on, of course, wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading down 26 points at 18,526. S&P off 3. She's trading at 2175. NASDAQ Composite off 888. That's trading out at 5218. Russell down 3 points at 1288. Gold's off $7. Silver's down 24 cents. Light sweet crude is flat, down 9 pennies, trading at 46.49. Big mover today to the upside dollar-wise. This Priceline leading the charge up $9, and OSI Systems up 8. Urban Outfitters up 6. Patrick Industries up about 4. Buffalo Wild Wings up 3. To the downside, it is Alliance Data Systems down about $11. Ultimate Software down 6. Lowe's down 5. Popeyes, LA Kitchen off 5 buckaroonies. But let's go see what's going on in these markets right now. Looks like markets are just trying to come together to wait for the Fed meeting minutes out there. So, and I believe that's 2 o'clock, 2:30, something along those lines out here. Now, let's go. So I see the comments in the men in the den out here, and yes, Z, we have a island top in the SPYs out there. So nothing more bullish than a failed bearish pattern. We've got extremely bearish patterns inside of the SPYs out there, the ETF for the S&P 500. So nice call there, and newsletter subscribers know that was an island top there. I didn't see any other island tops out there. Actually, I don't know if you or anybody else went back through. I tried to find other island tops for the SPYs. Let me show you what it is that we are at least looking at out here. And let's take a few things off of the screen. That way it'll be less clutter, means that we'll be able to actually see it, because you had to have a real keen eye in order to be able to identify it. And so we're going to show you what that looks like. Now, out here in the SPYs, what you can see is that on the trading session of August the 15th, that was Friday. That was a Monday. Yeah, that was Monday. We saw the SPY actually gap up. Now, the SPY is catching up to the equity futures contract, which started trading at 6 o'clock Eastern Standard Time here. But nonetheless, if you take a look at the actual high on the trading session of Friday, that high was 218.71. The low of Monday is 218.88. So you've got a nice little gap there. And then on Tuesday, yesterday, we saw a gap down, because the high, we saw a gap down, then we saw an inter-session high of 218.68 versus that low of 218.88. 20 cents, very hard for the eye to discern it, although it is discernible. And you had to have a real keen one in order to be able to notice it. Now, the other thing in the SPYs out here are that what it also did on that trading session, it also formed a shooting star candle. And it did a couple of other things when it was doing that. Let me go ahead and pull this chart over here. Yeah, well, look, let's do. I'll do a combination of things. Let's keep with this same chart for the moment. If we take a look at that swing point, that's the low that was formed on June 27th out here. We move all the way up to the high on July 1st, makes a shallow retracement for 2 days. That's your C point of your A to B equals CD. In this case here, 218.90 was the price projection. That was your 1-to-1 A to B equals CD to the upside. So it had completed that pattern. The candle that it actually formed here at this island top is I think I mentioned it, it's a shooting star. But what's interesting here, I'll pull this chart over because it's easy for me to do my wave counts here because I got a little tool. Boom, there you go, and I don't have to worry about missing something. You can also see, you can wave to me, it's in wave number 7. So you've got an A to B equals CD. You've got wave number 7. You've got a bearish shooting star. You then have follow through with the gap to the downside. That very next trading session, that's what you're looking for. That was yesterday. And so that's a beautiful thing. That says that this could be a significant top. Now, the problem with this island top is that really the underlying instrument for it is the futures contract out there. So, and did the ES Mini form on a daily basis? This is a daily base for the SPYs. Form the same type of patterns out here? Unfortunately, the answer is no. But nonetheless, this is reversal signals. This is reversal signals 101 out there, up at all-time highs. That's pretty interesting to make that. Now, the beauty of that island top, you know what we like to say here, there is nothing more bullish than a failed bearish pattern. So if that high gets taken out, it's sending us a very clear signal. So that's both good for bulls and bears out here. Now, with regard to price and where the SPYs, what they have actually done today, we'll go ahead and put our market profiles on. What we're going to see is they came right down, the SPY came right down to the point of control. And that is the center line inside of this daily profile. That's priced at 216.96. The low so far, 217.02. Now, at that point of control, you can see inside this box here for the SPY, lined up with a bias to the bulls. Why? That point of control closer to the bottom of the box. This box here formed at a higher high. So there's no question that it is still the buyers with regard to this price range that are in control. They will lose control if you see a close below 216.05. As long as that box is in play out here. So we know we've got a nice little top out here, and you've got the fight that's going on between the bulls and the bears. We can see that fight occurring on intraday charts as well. If we take a look at this 30-minute chart here, let me put this down. No, it wasn't this 30-minute chart. It was I know what it was. I was going to show you. Because yesterday we talked about the Dow and the NQ also on the daily chart really being key levels to watch. In my opinion, the most key levels for us to be paying attention to. So let me switch and go over there because that's then just simply going to make sense. Now, by the way, in the ES Mini, what we can see is price came, and we're going to use these profiles are really better than the ones that are on the SPYs, but it's okay. I believe that they provide better information for us. We can see, though, still you got the point of control on the daily chart. That's the blue line going across my screen. And you also have the point of control for the weekly time frame. So here, voila, boom, muy bueno. This is telling you that is a significant support level. So what you're watching for today in the ES Mini is any close below 21.69, we'll call it, because then that sets up a move to 21.49, which is where I believe that price is headed to. Based on the different topping patterns that we see out here. Could even get to 21.27. But when we come back, I want to show you what went on intraday thus far, and it really was inside the Dow futures contract. Remember yesterday we talked about how they formed a brand new market profile, and price was going to go ahead and get down and test that 18,437 level. Well, it got down to 18,443. Can we cut it just a little bit of slack? Let me show you what I was doing on the 30-minute chart. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on.
Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So if you're watching us on Tiger TV, you see the 4 different quadrants on my screen out here. The upper left is the ES Mini, the daily chart. And you're going to see some blue and green horizontal lines going across there. Those are both daily and weekly market profiles. The upper right-hand corner, the NQ, lower left is the Dow, lower right is the Russell 2000. Now, yesterday, we took a look at, in detail, both the NQ and the Dow. And we said, you know, those are going to be the first ones to give us a signal as to what the market wants to do. Now, what we were talking about there was that price was going to go down and at least test those lows out there, the low of the daily box. Both had brand new profiles. They were fairly narrow boxes. We were getting topping signals. We got topping signals that showed up Monday afternoon at 3:15 when I did Tom O'Brien's show. I laid out for everyone all of the liar's pokers, stuff that was out there that said that that this was the markets were going to go ahead and make a retracement, a correction. Well, there's at least a retracement that's been done because prices moved down to support. When we take a look at the daily profiles for the NQ, by the way, that bottom profile was 47.70. We actually got down to 47.72. Now, interestingly enough, on the really short-term charts, I was watching as price was pulling back there, because of my intraday trading, to see what was going on inside the NQ, see what was going on inside of the Dow. Now, on the 10-minute chart here, and that's about as short-term as I go, and there are good signals out here. You can see our favorite signals, my favorite signals, right? Price moves lower, does with less relative energy. That's what it was doing. Made a nice little bullish engulfing candle right here at 12.10. A little bit of follow through to the upside on that very next session. Gets above that oscillator on change line here at 12.30. Boom, and was also closing above its TAS market profile resistance level. Said that it wanted to move up to higher price. And where it was likely going to head to was into this down-ranging bar. We'll go take a look at volume, because the volume on the 10-minute session as well, and I'm just going to flip back and forth, but this way you can, go through the logic, or at least the logic in my mind. Sometimes you might call that illogic, but it is logic nonetheless. And we can see here there was good volume What I mean by good volume is here's that down-ranging, wide-ranging bar from the open this morning at 9:30. There were 13,782 contracts to be exact to the downside at the open. Now, at the open is when you're typically going to see your most significant volume. It's going to get it kept up here. This is the 10-minute chart, right? So we're just going to go ahead and incorporate Obi-Wan Kenobi's volume analytics out here. So you've got good volume to the downside, 13.7 thousand contracts. But hey, how about in that 10-minute bar from 1240 to 1250? Well, half the volume. 6,700 contracts to the upside. So that was telling us, you know what, probably let's just take a look at retracements, see what's going on here retracement-wise from the high of the swing down to the low. You know, did it get up to a level? Yeah, it got up to that 0.618 area. Right now, on a 10-minute basis, the price point you're going to want to pay attention to on the NQ is going to be 47.89. If it breaks through that, then prices continue to move back to the downside. Now, on the ES Mini, I'm just going to stay with this 10-minute chart out here. It actually had volume here on its bar of 45,000 contracts. Let me pull over my little data panel. 45,503 to be exact. And that was going against 88,000, right? So not enough, half the volume to the upside. Tells you you've got a nice little counter trend rally that is underway here. And that rally may be over. In the ES, you're going to watch for 2171. We'll call it 2170, as the exact number. Now, let's go take a look at what also was going on the 30-minute chart here for the Dow. And that was also pushing lower, doing it with less relative energy. Take a look at this, a 30-minute chart here. Nice old bullish engulfing candle, says that it too wanted to bounce out here. And that's really all that's going on as we speak. So you've got nice reversal signals inside of the market. You've got a market that got a little bit stretched too early, working that condition off. That's what it's been doing here since about 12:10, 12:30. If we go take a look at the daily advanced decline oscillator reading, right? Because that was part of our liar's poker game out there that said, I don't think so. New York Stock Exchange well below zero. It's at minus 105. You've got the NASDAQ Composite well below zero, minus 69. And you've got the Dow well below zero. What also was occurring at the same time that the intraday bottom was forming, and it was signaling to us that that's what it was going to do, that we were going to see some kind of bounce. It doesn't signal to us, hey, where's that bounce going to head to? It actually went a bit higher than I anticipated, but that's what markets are going to do what they're going to do. But the ability is to be able to anticipate the bounce, right? You got the markets moving lower, doing less energy out there. You wait for the cavalry to arrive. That's going to give you the signal, okay, that the bounce is underway. That way you can adjust your stops, make whatever plans you want, go play it to the long side, whatever it is that you might do it. And when we take a look at the other indicator, right, when we were saying liar's poker, out here, what we were looking at was this chart. We were looking at the mere fact that the VIX was making a rising bottoms pattern with price moving higher. You're going to get your hand smacked. You thought I was going to say something that you thought I was going to say Fanny smacked out there, and you're going to get that smacked too if you don't pay attention to this pattern. Now, what was really taking place, you can't see it on this chart because this is on a closing basis, but you can see it on this chart out here, right? We said, hey, guess where the next target? Yesterday on the show, we said the next target for the VIX index was going to be where? The 50-day exponential moving average. Right now, it's priced at 1372. The actual high so far today, 1371. So you got the VIX creaming right up into a level of resistance, right? That 50-day until it gets taken out. That's a level of resistance. We had price moving lower, doing less relative energy. It told us counter trend rally was what was in place here. At this stage of the game, that's all that it is. But it doesn't mean that it can't do something else. But that is how you read the markets with regard to what they're doing, why they're doing it. Because oftentimes you're saying, well, shoot, it was moving lower. Why is it now bouncing? Is it over? I don't think it's over. The game of liar's poker isn't done. This is not just a two-day deal out here. At least I don't believe that's a two-day deal. Now, what is it that we're going to watch? We know the levels that we took a look at on the daily equity futures contracts inside the NQ and the Dow. Those are the two most important levels for us to watch. If you didn't write it down, I'll give those to you here in a moment. And then that third level is going to be this 1372. It's going to change by a few pennies here or there. I believe it was 1375 earlier this morning. But, right in that area. if you see it close above the 50-day exponential moving average inside the VIX index, with everything else that's gone on, it's telling you that then the VIX index is going to move up to the price point of about 1837. Not to be exact, don't hold me to the penny, but it probably will hit to the penny. Actually might even take that level out. So you're watching that 1372, 1375 level. Any close above that, then you're going to look at about 1487, and then you're looking for the $18 and change mark for it to move to. Now, when that is all taking place simultaneously, and I do mean simultaneously, you're going to see the market careen to the downside. So no reason to get long this market on. I'm talking about, if you're trading on a daily time frame. Look, if you're trading on a weekly time frame, if you're trading on a long-term time frame, this market could not possibly be more bullish. It just simply couldn't be. And maybe when we come back from this break, why don't I, since we've spent a lot of time here or some time on short-term charts and really daily 30-minute charts, 10-minute charts. Come on, that's short-term charts out here. Why don't we go take a look at some long-term charts? I'll show you what we're looking at. Things look very good for moves to the upside. This is Steve Rhodes from TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, a question inside the Tiger's Den from TKC. I don't see any other questions out there. TKC says, would I be kind enough to review dust from a long perspective? So let's go take a look at it. Now, dust, right here, we'll put that up. That is the Direction Shares 300% ETF, inverse ETF of the HUI, of the Gold Bugs Index out here. Right now, today, it's trading at 547. You've got volume of 27 million shares out here. Last time that price was up in this neck of the range, it had about 34 million and 23. So you've got volume moving to the upside inside of dust. But because this, now I'll give you this piece of information as well on it, but we're going to go take a look at a couple things. I'll give you my overall take on this. As we take a look at the TAS profiles, what I'm going to do here is really move this off to the side. There we go. So now you can kind of see it, TKC. So with regard to dust itself, the levels that really you want to be watching for, because it's trading above its TAS daily profile, the high was 508. If you're in this trade, what you don't want to do is see this get below 473. And you're quite a ways away from that, and I don't know that you'd really want to give this that kind of a stop. To the upside, what should its next target would be if we utilize these typically hidden levels of support and resistance? Well, that's going to be the point, that's the bottom of the box, 675. So that's your initial target. Now, how are you going to get there? When are you going to get there? And as I take a look at the HUI, what's the good news on the HUI? Well, the HUI was moving higher, doing a less relative weakness out here. Price is trading below our oscillator on change line, 283.66. You don't want to see it close above the HUI above 283.66. Is this thing going to take off to the downside big time? I don't know. Tomorrow is a full moon, if I'm not mistaken. Is that correct? Some of you guys know the full moon's out here, maybe even better than I do. I believe it's the 18th. So if gold is going to take off in one direction or the other, typically happens right around a full moon. So TKC, this may be the the right side of the trade to be on. Now, I would say if I was only paying attention to gold, I would have jumped back in on the short side of this metal days ago. Why, might you ask out there? First, I anticipate that we're going to see gold careen to the downside through October, just to give you the type of what I'm looking for. Now, because that is my plan. Of course, I can't really have a plan for gold, but I have technical reasons to believe that gold's going to move lower into sometime in October and make one heck of a nice bottom out there. And it sure as heck hope it's a bottom that people are afraid to buy, including myself, but we'll go ahead and buy it anyways. Is that going to get started? Well, there have been what somebody in the den really turned me on to this, and I went back and started looking at the charts and started saying, now that's really interesting. Now that's really interesting is taking a look at the Japanese yen. In my case here, I'm looking at the Japanese yen futures. You're looking at the continuous contract for it on the bottom panel. And what you're looking at is the top panel is gold, the center panel is silver, and the bottom panel is that Japanese yen futures. Now, it is my belief, I believe it's a belief of many, because the currency market is, 10,000 times the size of the metals market out there. I don't know if 10,000 is right. Maybe it's 100,000. It's hugely important to understand what who's the dog, who's the tail. I say that the dog is the currency market. So it's the yen out here. So that's my assumption. Could be making, an ass of myself, but that's my assumption out here. The bottom panel of that chart out here, TKC, see how price has just simply continues to pull back even as it did today and test Stevie's red line. This is really the market's red line. I have nothing to do with it other than, for sure paying attention to it. It's about driving inside the lines out here. Well, this is an important line to be paying attention to. Otherwise, you're liable to do the right thing at the wrong time, get smashed. And I don't want you to do that. So you've got gold trading below the oscillator and change line. You got silver trading below it. It means our price oscillator has moved down. I see how I have the price oscillators out here, but they're all above zero. A price oscillator turning down above zero just says you've got the retracement. A price oscillator falling below zero, that says you've got something else that is more serious out here. And until the yen does that, that's what you're going to need. That could happen at any time. If we see that move below that line, then I say back up the truck and buy all the dust that you want out there, or short the now, I would actually, let me take that back. I'm more comfortable in being able to communicate what's going to happen with the metal. We just simply know this, that there's a directional correlation. There's not a movement correlation between what gold and silver do. And many of these equities in the mining sector have been mighty strong out there. So, are they going to take some hit? Yeah. To what extent? I don't know. And so I would say the better trade out there, at least with regard to correlating assets out here, is look to the gold and silver long and short trades out there. I think that is the overall better message. So TKC, I hope that answers your question, even as long-winded as it was. But if I don't lay out the reasons why or what you got to look at, then you're just thinking I'm pulling things out of thin air. That's what I was going to say. Thin air out there. Okay, so that takes care of the metals market. That takes care of, our markets, what they're doing. Now, going into, remember, let me give these numbers to you because these are going to be important. They're important for me. They're important for you out here. Remember, inside the NQ, what we're going to be watching is 4770.32. What we know right this stage is that prices held that level. But we're going to watch for that. Inside of the Dow futures, we're going to be looking at 18,437. It's really just, it's the number we're really probably watching. It is that number, but you'd have to say it's the low of today, 18,443, and inside the NQ, it's really the low of the day, which is 47.72, and a close below that. Now, what we're likely to see here over the course of the next 14 minutes is we're likely to see, and why that's important is not only is it going to be a market profile, but what it's also going to be is going to be a nice hammer candle on the 5-hour chart. See, this 5-hour chart that you and I are going to look at inside the NQ, it's going to close in 36. It's not 14 minutes. It's 23 minutes. So in 23 minutes at 2 p.m., and I don't know what this candle's going to look like, but it looks to me like there's a very good possibility we got a hammer candle. And that's a beautiful thing as well. Hey, look, if you're a bull, you can say prices came down to support, tested it, and away we go. It's a possibility. You can't rule it out. But what's really important, bullish or bearish, is any close below that hammer candle. Well, we know the expression, if you're long, you're wrong. And on a 5-hour chart, that says the NQ is going to come all the way back here to this swing point from about 12 in the afternoon on what looks like August the 2nd, somewhere in the 46.90-ish type area out here. So you've got a nice hammer candle on the 5-hour chart inside the NQ. We've got a nice hammer candle inside of the Dow. So all of this is really just lining up with important areas for us to pay attention to where the market really gives us a ton of information. If we take a look at the Dow 5-hour chart, you can see one heck of a doji candle out here. Doji, hammer candle. It was a doji and a hammer, but now it's just simply, now you've got the bullish engulfing hammer. So we'll see. Again, what really matters is what's this candle look like come 2 p.m. out here. May just turn out to be a bullish engulfing, but we'll see. So you've got some nice bullish reversal signals, and those bottoms are going to be really important for us to be paying attention to. So it'll be really interesting to watch the market, see what kind of response we've got during the polar show. All right, I believe it's around 2 o'clock. Guys, isn't it 2:15, something like that, when the Fed minutes come out, so the market can, so that all the quant trades can go pierce all that information and then decide what they want to do out here. 2 p.m. Thank you, Jay. I'm out of breath. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So I believe during that last segment, we got green on the Dow right now. It's up 11 points. I mentioned that the markets are really poised well to move higher. Now, that doesn't mean we're going to move higher. I'm giving you the longer-term perspective out here. What do I expect along the triptych of the shorter term? I expect we're going to see the market pull back. We're going to wait for some type of pattern to complete and then go ahead and consider taking it to the long side. But that depends on how much time elapses. We anticipate that in the middle of September, sometime in September, that the market is going to move lower in earnest to the downside. You know, that's going to be the short side that you're going to want to, that's the time where you're going to want to be on the short side of the market. It should move down also into October. So you got gold maybe bottoming in October, the market bottoming in October out here. And then from that point forward, we're going to see just huge gains inside of the market. It's going to release a ton of energy, which is going to last through 2017. So it's going to be the Santa Claus rally, by the way, folks. It really begins like end of September, middle of October. You don't wait for the Thanksgiving Day parade for Santa, with regard to the stock market, for Santa to be delivered to you. If you do that, you're missing out on some extraordinary opportunities that the market presents to you on average almost every year out here. So that's what we want. Now, if we take a look at what the markets have been doing, I think Basil typically covers what he covers. I don't want to, and I don't get a chance to listen to the shows in the mornings these days. But I think he really focused on the Dow and maybe the S&P 500. So I'm going to go ahead and focus on other areas. Let's take a look at the DAX. Hey, how about that? Let's take a look at the DAX. I'm pretty sure he probably doesn't focus on the DAX. Here's the monthly chart for the DAX. I want you to see on a monthly basis what it has been doing. If you watch this on Tiger TV, one of the things that you are seeing is you're seeing a really long-term sideways consolidation pattern that's in play. This pattern here goes from about the 2,400 level, 24 to 8,000. So, you know, it's around probably about a 5,500 point move or so. That is the consolidation pattern that it was able to break through convincingly beginning back in September 2013. Now, that has a measured move. That measured move is going to take the DAX up to the price point of about 13,700 out here. So when the October lows, because the DAX will also move lower into October out here, one might want to take a look at, especially with really free money over in Europe these days. One might really want to take a look at maybe putting some money into the DAX. Now, there is an A to B equals CD to the upside that is in play in the DAX. Now, this is a short-term one. This one is just coming off of the September-October 2011 area, and that's the black diagonal lightning bolt pattern. You see, that's got a price projection of 13,440. So we've got 13,440. We've got the 14,000 area where the DAX wants to move to. Right now, it's in this little descending price channel. But I'll show you on a weekly basis, it's actually broken through that little price trend line, not the channel. Now I'm just showing you the trend line out here. We can see that, you and I, we pay attention to these seventh wave moves. Do we not? We do. We do. And if you take a look at what the DAX did on a weekly basis as it was making that nice bottom here in February, makes a nice seventh wave move to the downside. And then it gives you the signal the very next week, did I say month, the next week, that'd be ended February 19th, nice little bullish reversal signal, the old bull sash. So we've got a trend line that's broken. Price probably pulls back to test that trend line to tell us whether or not it was a real break. And then it's got to move up to the 10,989 level. So I expect it will pull back. This pullback may only last just a few more days out here. Today's Wednesday, so Thursday, Friday, maybe Monday, something like that, as a possibility, and then a move higher into early September. And then in the case of the DAX, it would go ahead and finish off this pattern at the 10,989 level, then begin its pullback. But as I say, in October, you're certainly going to want to be paying attention to that. On a daily basis, if I look at the DAX to see what kind of signals we have out here, let me update this chart. Certainly with regard to wave counts, nothing there for us to pay attention to. But we can see that price was moving higher, doing with less relative energy. Gaps down. That's your bearish reversal signal. So in this case here, price is probably pulling back to this blue horizontal line. That's really the level of support out here around the 10,367 level. So that is on the DAX. And, we're sort of all connected out here. We can look at other charts here. Let's take a look at the Russell 2000. What's the Russell 2000 doing, right? Let's look at the monthly chart. Let me pull over the monthly chart for you. Now, here's one that I missed until I started going back and taking a look at what was really going on out here. Let me turn this one off. The Russell 2000, and this is hard to do. The Russell 2000, and we used to beat the living tar out of it because it's just moving sideways, moving sideways, moving sideways. We got tired of it saying it was moving sideways. Well, guess what? It wasn't just moving sideways. Back in February of this year, February 2016, what the Russell 2000 did was made a Gartley buy pattern. H.M. Gartley had to be trying to punch up through the dirt and, I don't want to, it maybe sounds a little bit weird, but from upstairs, he must have been yelling downstairs saying, hey, I didn't even think that could be done on a monthly chart, that we would see an A to B equals CD to the downside and form a long-term Gartley buy pattern. But, folks, that is what has taken place inside of the Russell 2000. And, my belief is that when the Russell 2000 is the one that is leading, it doesn't have to be at all-time new highs. It just needs to be the leader in the race out here. It, along with the NASDAQ out here, the markets do just marvelous out here. Well, this is poised and set up to do really well. Now, it's first got to complete its original breakout area. We took a look at the DAX. We looked at the sideways consolidation. Now and you've known this number. We've been targeting 1350 for God knows how long. He does know how long, or she knows how long, and that is going to come to fruition. And then when that level gets taken out, then we've got, I'll give you the conservative A to B equals CD up pattern inside of the Russell, and where that's going to take us to is right up to the price point of about 1637. So it's not just 1350. And you heard it here that Stevie's calling for long-term inside the Russell. It's 1637 and maybe even higher than that, because this move off of this sea leg as we speak right now, it is mighty. Did I say mighty? It is mighty strong out there. So the Russell 2000 should become your new best friend. It's going to be a gift from Stevie Claus out here when we get to that stage in that October-ish type time frame. And on a weekly basis, if I just take a look at what's going on right now inside the Russell, actually nothing to be worried about. Like I say, daily charts are giving us some signals of a pullback. On a weekly basis, really nothing. No reason for it to not get up into this 1275-ish type range. It's got an A to B equals CD to the upside as well. And that was not just a Gartley buy pattern. It was a butterfly buy pattern. It was everything back in February inside of the Russell. So 1333, that says that 1350 is a very real number out here, and we'll see it sooner than later. But on the real soon side is a continued retracement inside of these markets. Steve Rhodes with TFNN. That's the long-term perspective. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 8. S&P is down 2 points. Composite is off 9. I don't see any messages in the den nor anything on the from email. So really nothing else to cover, I guess. So we'll just go ahead and play some music. What music should we play if we were going to play music out there? So much to choose from. Of course, in our area, that's when all the good music stopped. In our, I don't know how that is, but hey, it's okay. Works for me. All right. So let's go take a look at a couple of individual stocks. Let's do that. Let's look at something like Urban Outfitters, up 16% out here. So I don't know why it's up. We just know that it's up on high volume. So let's go try to get a feel for where Urban Outfitters is headed to. Man, that's taken out a B point of an A to B equals CD to the upside out here. Lots of gaps on this. Could I cover oil? I can cover oil. So let me do that. But let me just give you the A to B equals CD price projection inside of Urban Outfitters out here. High volume low out here, that's for sure. Way back in November 2015. That's your A point. B point is looks like April the 4th. Your C point down here and about May the 17th. Come on, work. We're on the air. It's live. There we go. 1-to-1 says 39.80, but it's coming into that D point. With wide-ranging bars, so probably going to head beyond that. Looks like this is going to go move. Well, it's got to deal with this little supply line of this gap to the downside from May 19th. 26 million shares. So it looks like it's just going to complete the 1-to-1 A to B equals CD to the upside. With regard to light sweet crude, the question is, would I cover that? So let's go cover it. Let's go take a look at it. 46.37. So light sweet crude has made its own A to B equals CD to the upside thus far. If we take a look at what it has done so far, the blowout here on the trading day of August 3rd, your A point. Your B point is out here, that nice little candle session on August 9th. Little retracement, big, huge bullish engulfing key reversal. Our outside day, really. You can see it's made the 1-to-1.272. A to B equals C to the upside. This is the daily chart that we're looking at. And that was price projection of 46.61. Today, actually, the high has been 46.79. Not too shabby. At this stage here, Mick, it looks to me like price is going to try to tag the 47.53. But let's go see. In order for it to do that, it says on the 30-minute chart what it's got to do. Well, it's broken through this little trend line. This is very short term. Whoops. Didn't necessarily mean to do that, but, well, no choice. There we go. So here's a little trend line that it broke through. And it broke above that 7th wave. Let me hit my button out here. I have to say, Mick, that it looks to me more likely than not because it broke above, closed above a level that it shouldn't have if it was going to continue to move lower. So it looks to me like light sweet crude is going to move higher before it moves lower out here. And that next price target, the range is going to be either the TAS weekly profile high of 47.53 or the 1-to-1.618 A to B equals CD, which is 48.11. Now, all of that could be setting up a Gartley sell pattern. And if we take a look at that, we're just going to look at retracements from the trading day of June 9th down to the low out here on August 3rd. We were going to look at that, but it looks like Stevie grabbed the wrong tool. We're going to do that again, so don't pay attention to what I just did. And you can see right at that TAS weekly market profile high is the 0.618 retracement level. So you really want to watch this 47.53-ish area like a hawk. That could be the extent of the move. And then if you see a bearish reversal signal, then the suggestion there is that this could be forming an A to B equals CD, then to the downside. That would be your Gartley buy pattern. That is the ultimate outcome of any Gartley pattern. That's why when we looked at the Russell 2000, a monthly Gartley buy, I'm giving you the ultimate outcome, just as you would like it. So, folks, stay tuned. I'll give you some more ultimate outcomes. It's Wonderful Wednesday. That means our man, the polar bear, David White, he's up next. Tom O'Brien from 3 to 5. I'll see you on Terrific Thursday. Have a great day, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.